Dear students, welcome you to session 56 of chapter Pricing of Material Issues, Cost and Management Accounting, third semester BCom of Mangalore University. Session 56 is about the preparation of stores ledger using the first in first out method. From the following particulars pertaining to material X, prepare a stores ledger using FIFO method of pricing the materials. February 1st, 2017, opening stock 600 units at rupees 32 per unit. We have information about the purchases during the February 2017, the different dates and the quantity and at what rate it was purchased, as well as the goods received note number. Same way, the issues during February 2017, the different dates of issue as well as the quantity issued, MRN number, and the department to which these materials are issued. Additional information is also there regarding the materials received back from department A, shortage of 30 units and returned back to supplier 25 units. So this is a problem of preparation of stores ledger using FIFO method, wherein we have adjustments relating to the shortage, returns to supplier, as well as returns from the various manufacturing department. The information is given not in a chronological order, so we'll have to be careful while preparing because the stores ledger details have to be recorded in a chronological order itself, so we'll have to be careful with the dates. So we have information about purchases, issues, as well as the additional information. So the stores ledger can be prepared this way. Stores ledger, FIFO, the description, the material name is given, that's why it is written X, code number, location code, unit, maximum level, minimum level, reorder level, and reorder quantity. The different columns, date, receipts, issues, and balance. Receipts, there are different columns under that: goods received note number, quantity, rate, amount; issues, material requisition number, quantity, rate, amount; and the balance, quantity, rate, amount. To begin with, the opening stock 600 units at rupees 32 per unit. So first, date February 1, the balance 600 units at rupees 32, 19,200. Then we need to look into the dates. The next date, whether it is purchases or issues or additional information, the next is February 6th issue. So on 6th February, issues 400 units. The material requisition number is 617, that's written in MR column, and 400 units are issued. There is only one lot available, so it is taken from that. 400 units at rupees 32, 12,800. The balance will be 600 minus 400 units, 200 units at rupees 32, that is 6,400. The next date is February 10th, that is purchases during February 2017. So the purchases 400 units at rupees 25. So in the receipts column, goods received note number 446, quantity 400 units at rupees 25, 10,000 rupees. Now the balance will be 200 units at rupees 32 and 400 units at rupees 25. The next date is February 14th, received back from Department A 50 units. So we have issued materials to Department A at rupees 32. At the same rate, we are going to receive it back. So receipts, return of goods, it is written in goods received note number 50 units at rupees 32,600. Now the balance will be 200 units at rupees 32, 400 units at rupees 25, and 50 units at rupees 32. And the next date is February 15th. Shortage of 30 units as per stock verification. There is a shortage of 30 units, and shortage is always shown on the first lot because the method which is adopted here is the first in first out method. In case of first in first out method, shortage will be shown on the first item. So here in 200 units, there is a shortage of 30 units. So the rate will be 32 rupees. 30 units at rupees 32, 960. So the balance will be 200 units minus 30, that is 170 units at rupees 32. Then the second lot 400 units at rupees 25 and the third lot 50 units at rupees 32. Now on the next date as per the information given is 16th February. There is a issue of 230 units. So the MR number is 620. 230 units are issued. Now to issue 230 units, first lot has to be taken fully, that is 170 units at rupees 32, and from the second lot 60 units have to be taken. So from first lot 170 units at rupees 32, from the second lot 60 units at rupees 25 will be issued. So what is remaining now? The first lot is entirely issued and from the second lot 60 units are issued. So 340 units. So 400 minus 60 units, 340 units at rupees 25, 8,500, 50 units at rupees 32, 1,600. The next date as per the information given is February 28th. Quantity 380, purchased at 30 rupees, and the goods received note number is 447. So 20th, receipts, goods received note number 447, 380 units at rupees 30, 11,400. So the balance will be 340 at rupees 25, 50 units at rupees 32 and 380 units at rupees 30. That is the recent purchase. And the next date is February 24. Returned back to supplier 25 units. Goods received note number 447. So 447 goods received note, we can see it is on February 20th. On February 20th, we have purchased 380 units at rupees 30. So 25 units of this lot will be returned to the supplier. So issues column 25 units at rupees 30, rupees 750. So it is taken from the latest purchase of 380 rupees. It is mentioned that as per good received number 447, 25 units are returned back to the supplier. So from that particular lot of 380 units, 25 units are returned. So the balance will be 340 units. The first lot 20 at rupees 25, the second lot 50 units at rupees 32, the third lot the recent purchase that is 380 minus 25 units, 355 units at rupees 30, 10,650. Now the next is February 25th. February 25th, there is a receipt of 400 units for at rupees 35. So receipts column 400 units at rupees 35, 14,000. The balance will be 340 units at rupees 25, 50 units at rupees 32, 355 units at rupees 30, 400 units at rupees 35. And on February 26th, there is issue of 340 units, the MR number 716 and which department is team. So 26th issues column MR number 716, 340 units, that is the entire first lot is being issued 340. So it is issued at a rate of rupees 25, 340 at rupees 25, 8,500. So the first lot is issued. The balance will be 50 units at rupees 32, 355 units at rupees 30 and 400 units at rupees 35. Now on February 27th, when you see, we have received 325 units at rupees 46. So 27th, the GR number is 451, 325 units at rupees 46, 14,950 is received. So in quantity 325, rate 46 and the amount is 14,950. So the balance will be 50 units at rupees 32, 355 units at rupees 30, 400 units at rupees 35 and the recent purchase 325 units at rupees 46. Now on 28th February 240 units are issued and the MR number is 728. So MR number 728, 240 units are issued. So it has to be issued from the first lot, entire first lot 50 units, and from the second lot of 355, 190 units will be issued. Together it will be 240 units. So 50 units from the first lot and 190 units from the second lots. So 50 units will be issued at rupees 32 per unit, and 190 units will be issued at rupees 30 per unit. So two items here, 50 at rupees 32, 1600, 190 at rupees 30, 5700. Total it is 240 units. Now the balance will be the first lot here. In the previous case, the first lot 50 is entirely issued. From the second lot 355, 190 units are issued, which means the remaining balance will be 165 at rupees 30, 400 units at rupees 35, and 325 units at rupees 46. So the closing balance quantity will be 165 plus 400 plus rupees 3 plus 325 units, totally 890 units, and the value will be 4950 plus 14,000 plus 14,950, totaling to rupees 33,900. So this is the preparation of stores ledger, wherein the adjustments relating to returns to stores, returns to vendor, and shortage is explained. Thank you.